Today, I'm going to share with you the number one thing that's holding new investors back right now: interest rates. And listen, I get it. No one wants to utilize higher interest rates, especially if you're looking at things from a black and white perspective. I can see why a new investor might make a snap judgment, decide to push off their goals until lower rates are coming. When is that going to happen? But if you were to do that, you'd be overlooking some serious benefits of investing sooner rather than later. Now, in this video, we're going to dig deeper into what's really going on with interest rates right now, what's really behind the fear of higher rates, and more. If you're waiting for interest rates to drop before you invest, you might be overlooking this important point. When mortgage rates drop, home prices will go up. It's inevitable. So if you were to buy right now, you could expect that when interest rates go down, you'll have instant equity built up, right? Because home prices go up, suddenly you get equity and you didn't do anything about it. On the other hand, you could pay more for a home next year, missing out on the potential to gain that equity, right? It's a time in the market consideration. Another thing to consider about waiting on lower interest rates is the impact rates have on the rental market right now. See, when interest rates are higher, we see more demand for rental properties as fewer people are able to buy a home. We see this happening right now for millennials who are now priced out of home buying once again. They thought they would be able to, jump in, and then of course interest rates go up, and now millennials are forced to rent, and they're stuck, and they're not going to be buying a home for perhaps many, many years right now. We know there's a housing crisis in the United States, and while there's nothing we can do to influence interest rates or lending practices, we can provide high quality, affordable, and safe rentals to those who need them right now. So let's talk about the timeless appeal of real estate, my favorite form of investing. Regardless of interest rate fluctuations, rental real estate can provide a sense of stability unlike any other investment type out there. Let's just compare real estate to stocks, for example. The security of real estate investing is unmatched. Stocks can plummet to zero overnight, but a tangible real estate property can only increase in value over time. And it doesn't really matter what the interest rate is because your asset is growing in value, building equity, and bringing in monthly cash flow month after month, year after year. I mean, just look what happened this past week. We saw stocks plummeting on news that Europe is in trouble. So people jumped out of stocks, jumped into U.S. treasuries, and stock market plummeted over the past few days. So this is the craziness of the volatility of the stock market, sort of moving on a whim with what's happening in Europe, what's happening with Jerome Powell, what did he say about interest rates, and everyone goes a little crazy. That doesn't happen in the housing sector. Housing continues to climb in value year after year after year. Plus, during that time, you can always refinance as the property goes up in value, and if rates decline, so rates come down in a year or two and your property has increased in value, then just refinance it. I stand by the mantra that date the rate, marry the property. This means you're committed to your investments. It's strong, it's solid, it's sustainable. The rate, though, feel free to drop it, ditch it. That girlfriend's not working out. You're not hitting it off the way you thought. Well, then drop it. Something else better might come along, right? There's more fish in the sea as it relates to real estate investing rates. So when rates drop, you can always lock in a better deal, but you can't go back in time and change the sale price of your property. You can't go back and suddenly then buy a property. So it's time in the market. And smart investors know that buying when rates are normal or a bit higher is actually the smartest approach. They avoid the feeding frenzy that takes place as soon as the rates drop and those prices go up. And as a result, they've saved thousands of dollars on the purchase of the property. So I want to remind you, right now, investing in real estate is all about the long-term approach. The sooner you begin building up your portfolio, the sooner you'll reach your financial freedom number, right? What is the number that you need to achieve financial freedom? The monthly cash flow that you can, retire from your day job so that you have that monthly cash flow coming in from those rental properties. What is that number? What is your financial freedom number? Natalie and I just bought 4 properties over the past few weeks, right now in this environment. So as long as the numbers make sense and the market is solid, it's smarter to buy sooner rather than later. If your strategy is solid, it will be built on the pillars of minimizing taxes, protecting you from inflation, building equity, and having multiple performing assets in your portfolio. Yes, interest rates matter, but it shouldn't be the deciding factor when you're considering buying assets. If interest rates are holding you back from reaching your goals, I hope this video was encouraging to you. No matter where you are right now in your real estate investing journey, it's always wise to consider your options and to take a look at fears and all of those limiting beliefs that are washing through your brain that might be holding you back from taking action. Thank you for watching this video. I hope you'll subscribe for more valuable and timely real estate content here on the channel, and we'll see you next time in the next video.